Thursday, the 28th of November. Welcome to Business Morning. I am Busi Namafaye. Moody's Investor Services new report says top Kenyan banks have stronger cost-to-income ratios than Nigerian banks, despite their higher retail overheads. Moody's pairs Kenya's KCB, Equity Bank, and Cooperative Bank against Nigeria's Access Bank, Zenith Bank, and UBA in a new peer comparison report released late Wednesday. The report says Nigerian banks lenders focused on lower margin corporate clients, while Kenyan lenders post higher net interest margins on more exposure to retail clients. The report says, quote, "We expect Kenyan banks to maintain superior profitability to their Nigerian peers, owing to higher margins, stronger cost to income, and lower loan loss provisioning costs." That's according to Peter Mushangwe, who is a Moody's analyst. Meantime, Nigeria's former President Olusegun Obasanjo has backed President Buhari's land border closure that was effected first on the 20th of August. President Obasanjo asks Benin Republic to respect ECOWAS bilateral relations with Nigeria. President Obasanjo says the issue of dumping of smuggled goods and all that into Nigeria actually happened while he was in office. He says Nigeria does not have any issues with goods manufactured in Benin Republic, but as long as the neighbor allows dumping of goods into Nigeria, there will always be problem with Nigeria. Meantime, the Nigerian officials have restated there will be no reopening of the land borders with the sub-region to the west until Benin Republic respects trade protocols as discussions continue with the neighboring states. That's yesterday at the end of the cabinet meeting. So the House of Reps is asking the executive branch to increase the size of the country's capital expenditure in the annual budgetary allocations to 40% of the headline total. The Reps decry the current level of about 10% of capital expenditure in the total budget as indicated in the 2019 appropriation. So the move is being made right now to get the Buhari's administration to increase the capital component of the entire budget. We've always had the lopsided recurrent expenditure taking the lion's share of our annual budgets. A reaction still coming through from analysts on Tuesday's Monetary Policy Committee briefing by the Central Bank's listed investment bank, United Capital, says Nigeria's manufacturing GDP is expected to continue on the path of expansion in the fourth quarter we're currently in, on the back of a sustained improvement that was seen in October and November 2019 Purchasing Managers Index. That's supported by banks' renewed appetite for lending. According to United Capital, the outlook for the better manufacturing numbers for GDP in the final quarter of this year is on the back of increased GDP that we saw in the second quarter or the third quarter numbers released a few days ago by the Statistics Office, and the credit expansion in the manufacturing sector as outlined by the Central Bank Chief Godwin Emefiele on Tuesday. Okay, so let's leave it there for now. Let's check in with the markets. Yesterday, the Treasury bills markets went on fire as the Central Bank of Nigeria kept its plan of subscription, so total subscription at the primary market auction was more than 500 billion. The central bank sold just about 105.7 billion naira, and rates tumbled further. We'll talk more about that later on the show. But let's start with the stock market, where the markets continue to see a bit of a profit taking as we head into the final period of the year. That's a 0.35% haircut on market reading below the 13 trillion naira threshold. I'll flip that over and look at the primary market indicators. And as you can see, in terms of turnover volume, that slipped below Monday and Tuesday level, below 200 million at 189, and printing a lower value of 1.5 billion naira and even a lower number of deals of 3,410 transactions. Look at the five sectors very quickly, and let's just throw this in. You can see where the market bled the most on Wednesday. Oil and gas dipped 1.07%. The banks lost 0.5%, and consumer goods and industrials added to that. The only green shoot among the top 5 sectors was insurance, about 0.5% in the green territory. The oil and gas has a bit of a story to tell you about the reading. So let's just take a few seconds and look through that. Owando lost north of 9% on the back of more than 1 million ordinary shares, close to 2 million shares traded, 3 naira 50 kobo, the closing bell. Japol fell 4.55%, just a little pullback there on a bigger volume than oil and energy trading major Owando, and then Capoil 0.41% in positive territory. So let's move on to the NESD over-the-counter market, 1.09%. All these are just coming through. But the big story, as you heard earlier, came from the Treasury bills market on Wednesday. Today is Thursday, and this is where we see hundreds of billions of matured treasuries. We'll talk about that later on the show. But let's check in with the commodities market. That's coming through in a second. So we've seen a very interesting week on the economic side. Monetary Policy Committee briefing of the Central Bank of Nigeria. I'm sure that's one big story that the economic think tank or financial derivatives company, Nosike Nwajide, who is a member of that team, is here to look at that for us. Morning. Welcome to the program.
Morning,
I'm sure that's one big headline story for the week that caught your attention at FTC. What's in that briefing for you folks?
One of the major takeaways was the CBN saying that it's determined to defend the Naira, obviously. The reserves have fallen about 8.3% this year, external reserves. And, typically market participants, investors would panic as to, okay, reserves are falling below $40 a barrel. Oil revenues, forex earnings are not as high as they used to. The outlook for oil prices isn't looking any better. The advanced economies have also, even when they've shifted to more accommodative monetary positions or stances, the capital inflows haven't, increased as such. The governor has come out to say that, look, we would, basically saying that we would defend the Naira the way that we have. I mean, 3 years ago, the reserves were as low as $23 billion. And they, through aggressive intervention at the forex market, they defended the Naira. And I think they are poised to continue to do so, even if reserves are falling. At the end, the choice will be between, imposing more import restrictions, as it were, and other measures to stave off forex demand. And the other option is obviously Naira devaluation, which I don't think it's something.
It's not a card on the table.
It's not even a card on the table.
It's not anyone on the table.
They will lean towards.
I'm sure. I look at the list of what you folks sent in, and I saw that the credit expansion to the private sector. Everybody's not missing that.
Yeah, that's great news if you ask me. The biggest beneficiaries were the manufacturing sector as well. The LDR increased to 60 and on to 65 by the end of the year. As banks are now lending, interest rates are lower. Obviously, on the supply side, I mean, the manufacturers can now have increased credit to manufacture and this output.
Get more raw materials, inventories, and all of that. Maybe hire more people.
Definitely. But on the demand side, consumers are still constrained by lower purchasing power. And that is, I mean, as a manufacturer, you always take that into consideration. How much output am I being put out there for consumers?
For consumers to buy. So you can really raise prices way out of the shelf for folks to buy. So the authorities need to work on the demand side.
The demand side.
The supply side push is already there by the central bank and what have you.
As long as you have lower interest rates. There are other constraints to doing business as well, but the credit constraint is much lower at this end. There's logistics issues, there's power, there are other issues that the manufacturers contend with.
Yes.
So, I mean, the CBN has solved the problem that it can. The other problems are fiscal problems. You don't use monetary tools to solve fiscal problems. So at this point in time, CBN has done what it can. It's up to the federal government to tackle the other problems so that, manufacturers can even lower their costs further. And even with lower purchasing power, the consumers can consume more and increase aggregate demand, and in turn, manufacturers make more money, increase output.
It looks like from the soundbite we've heard over the last 24 to 48 hours from the Central Bank Monetary Policy Committee saying, look, the land border closure is okay, but should be temporary. That's what I deduced from that their statement. It's a land border closure. Yesterday, we heard from President Obasanjo, who says Benin Republic should respect Nigeria's trade protocols and what have you. Then, of course, we have the FEC meeting, the government officials, cabinet ministers digging in and saying, look, we're not reopening the border until Benin Republic respects trade agreements, trade, transit goods, and what have you. So it looks like this border closure, technically on Nigerian side, there's no retreat, no surrender. That's what it looks like.
At this point in time, that's what it looks like. I mean, in view of the African Continental Free Trade Agreement, I mean, eventually there will be, I know there are a number of things that we need to put in place institutionally. I mean, the customs need to be strengthened because it makes, I mean, having everyone go through the seaports rather than land borders, which have been cheaper for them, even if at the end of the day, most of them smuggle these things in, and Nigeria loses revenue.
And smuggle some things out as well.
Smuggle some things out as well. So we lose revenue.
There's some images on social media. I don't want to believe it. They're putting petrol in sacks.
Yes.
I don't want to believe that. Someone posted that to me yesterday.
As long as the incentive remains, as long as petrol is 145 naira a litre, and across the border it's close to 300.
A subsidy import regime.
Yes, people will have that incentive. Even if it costs you 50 or 100 naira per litre as a cost to get it across, you still make profit.
When you step across the border.
Yes, that incentive exists, so people would go through hell and high water to get it across and to bring things in as well. So it's strengthening the institute, the customs. That is something that will take time. And for now, the only alternative as to stop the smuggling and other illicit activity that goes on is to close the land borders and everyone go through the seaports, even if it means higher import costs.
You folks are taking note of the stock market rally. Bumpy market is a bit bumpy right now.
Well, yes. I mean, the build-up to the MPC meeting, we had a couple of days where the market went up, and since then it's been down. It's been down all the way. The market sentiment hasn't. I mean, no one really expected a cut in rates. Really, I mean, the probability of that happening was less than 10%, in my opinion. So markets have seen the MPC meeting come and go, and the rates were held. So after that. That was on Tuesday, and yesterday market fell. The day of the meeting, the market fell.
Yes.
And it fell yesterday.
Yes, and it fell again yesterday. Yes,
as well.
Yes, so maybe the whole thing had been priced in already. Then it filtered out, and we're back to the basics, as it were. Everybody's back to earth, technically. But again, if you look at the companies listed on the exchange, a few of them are involved in using palm oil, what have you, in the margarine production business. And if you look at margarine, sometimes it's difficult for folks to associate it with agriculture.
Yes, it's very detached from agriculture.
Seriously detached, because it looks very sexy, really nice, very sweet.
The ingredients are palm oil, vegetable oil, and water, so to speak. It's a healthier alternative, and even cheaper alternative to butter. Yeah, and we're living in a time where people are becoming more health conscious. That would stimulate more demand for margarine in the future. There are two types of margarine, basically. There's the spread margarine and there's the baking margarine. So the demand for one depends on the demand for the other. If you were to bake, you demand margarine to bake bread. Then you now need margarine as a spread on bread.
Yeah, because it go everywhere these days. Is hawking bread and say
yes, bread is a staple. And depends on
butter bread, buy butter bread, and all of that. Sometimes I wonder, do you have butter in those bread?
Well, that remains to be seen. Margarine is cheaper. It's cheaper than butter. Nigeria is at the moment it's still something that is really smuggled across the border. Margarine is on the 42 item. Prohibitive list.
Yeah, because of the primary ingredient, which is
palm oil, and sauce.
Yes.
It's something that we've had
and vegetable oil.
Companies who.
So if you look at Unilever, for example, I just want to mention them here, which has one of the oldest and the biggest market share of margarine.
It's a household name.
It's a household name. So you think the entire conversation around palm oil, vegetable oil, with the central bank and all that deepening could have impact on this company? I'm sure there was a time they relocated to Ghana. They are back at home.
Yes, I mean,
now.
The relocation was the cost of doing business at the end of the day, like I said earlier. The CBN can only do the much it can, using monetary tools try to lower the interest rates and addressing the cost of credit. There are other constraints to production that these companies would weigh and say, look, it's cheaper for us to do business elsewhere. The cost of doing business.
If we drill down these numbers, which I'm looking at on your graphics here, where the 12th biggest importer of margarine, import bill 31.46 million. Okay, we can deal with that.
Yeah, but it's something that obviously we could address. It's something that we could make and produce here and take that off
and put the $31.46 million in our pocket.
In our pockets, and with the growing demand for more healthier products, Nigerians are becoming globally and even domestically.
We have a huge youth and kids population.
Yes,
go to
kids,
school every day.
Bread and butter.
Yes.
Bread and butter could be bread and margarine. Because so people call Blue Band butter. It's actually margarine. It's used interchangeably, but it's really margarine, not butter.
No, not butter.
No butter. Butter is a brand. It's something entirely different.
It's
a substitute, but it's something entirely different.
I don't mind. But again, I'm hearing, if you take about a minute with the soft commodities, some stories I'm hearing about the weather hemisphere is a bit unsettling about wheat and what have you in the US, the cold snap and all of that.
The weather conditions are wreaking havoc. For corn, prices are up because obviously it's a harvest season and the weather is delaying the harvest, basically. So the outlook for output is a bit dimmer. So prices are up. For cocoa, there's reduced output from Ghana and lower than expected rainfall, causing even the market to feel like production or output in the near future would be lower than expected. So that's pushed prices
I can see
up.
sugar prices now, but I'm not sure I'm consuming more sugar than... I'm not sure I'm eating any sugar, even though prices...
Yeah, prices are lower.
Prices set up to 12.78.
Yes,
I'm not sure I'm eating. I'd rather have my corn, have my wheat, which is good. I think which is about the most squeezed here.
Yes, it's down almost 0.1%. There's tightening supplies globally, but the major thing in the US, the weather conditions have caused havoc.
Okay, let's leave it there for today. Thank you very much for doing us the commodities update for the month, and then we're going to see you at the other side. That will be in December. Nasike Mwajide from Financial Derivatives Company. When we come back, today is the Nigeria's National Productivity Day Award. Some big names are being awarded today for being entrepreneurial in Nigeria's economy. Channels Television's chairman and chief executive John Momoh is among those who are standing up for honors later today. So let's have some conversation about how do we measure Nigeria's productivity using the state of the economy and the country's entrepreneurial spirit. That's the conversation we're coming up with next.